Hey guys, this is Simon with Trade and Perform Coaching, and it's been a long time since I made a public video, but I thought some interesting things happened today, and I see some things posted on, always on Twitter or stock twits that concern me a little bit. And right now, one of those things are people who want to aggressively short, right? And then secondly, what when I see something that I think can help people out in their own trading, I'm happy to share that. So, in that vein, I want to kind of jump right into it. I'm going to try to keep this brief, which is always a challenge for me. Um, let's jump in and look at where I start my research. And when I came in, or after the market yesterday, I knew this area here was a key area, this 23.2375 to 23.2116. High volume nodes in general are important in the market. They provide kind of a general guidance of where the market wants to go. If it gets below them, we're generally going to look to travel from HVN to HVN in a general way. There's no specific rule about it, but coming in today, I knew that this was really a very critical location right here. And so, how did I handle that? Well, first of all, when we look, let's go look at how the day started off. We had Janet Yellen speaking. So anytime you have the Fed chair speaking, it always adds an increased increment of risk. Now, when the market's very, very volatile, that pushes the volatility past the point where most traders can handle it. However, we've had such little counter rotation and such little volatility that she actually ended up opening up the market and providing opportunity for traders. A couple of keys that I was looking for today. I wanted rotations somewhere between 7 points and 15 points. I didn't expect much more than 15 points today to the downside, particularly if we could not break prior day's low, right? Next, I want to enter my long side positions on negative ticks because generally every negative tick has, in a general way, been bought back up, right? And then I also knew that if we couldn't penetrate prior day's low, that that anyone who tried to short aggressively, or cash buyers, cash shorts, if you will, who are waiting to come into the market, we're going to get caught and we're going to be forced back in. So remember, this is all playing against a market that is very, very, very far extended, giving a lot of day traders, I don't care who you are, this is just not giving great entries because you're not getting big rotations down. So we're kind of in a situation where you don't want to be aggressive short, but you kind of would think under most circumstances this may be would have limited upside, although that wasn't demonstrated today. So we're in a little bit of a paradox there. So what can we control? Well, what we can control is a very strong focus on our entry process, right? Have pre-planned scales, and if you think you've got the home run, you can leave a trailer for the home run. That would be my thought process. So coming into today, when we come into my chart, this is my chart for the day, right? And I'm interested in the morning. Janet Yellen starts speaking. Let's open this up. Janet Yellen starts speaking at 9 a.m. Right? By the way, she speaks again tomorrow, although I imagine it'll be much the same muted response, right? And so you can see when she started speaking, the initial response was bullish, right? And I read this as bullish when we got this reversal candle. I thought if they closed below 23.23 and they could get below 23.21, which was key, was getting below the 23.21, right? Because remember, this is Monday's low, right? So I thought getting below here was key. So my first instinct when we rolled back up was I thought, hey, as long as this holds and we don't penetrate Monday's low, we're probably going to get some responsive buyers. But if you'll look at the tick, the other thing that made me think that is, look at the first time we tag. This is negative 600 on the tick. And if you'll go through and look on your own chart, and you'll look at the NYC tick, each time we've gotten to, in the last couple of weeks, negative 600 with rare exception, we've been from that first touch within 2 or 3 points of of a swing low, right, or a tradable low at least. And so if you'll look, that's exactly what happened. We pushed in the negative 600. We pushed to the bottom of my white zone, which is in this case was the HVN. And we respond back up from 23.21 all the way up to roughly 23.24.50. And that was an okay trade. That wasn't the trade I was looking for. Yellen just started speaking. I wanted to give it a little bit of rim. But then something very interesting happened. We got a negative 800 tick on this push down. And if you'll look, and again, let's get rid of some of my retraces there that I use for entries. Okay. And so you have to have a thought process here. When you see that push down to that negative tick, right, the natural response is, hey, we should probably close below the last physical close of a push down, right, where this bar was. We should close below this point right here was my thought, right? If you ask me, hey, if we get a big negative tick, I'm going to say we should close below and we should at least test, if not break, Monday's low. That didn't happen, right? Immediately that sets off alarms. Now, this behavior of dancing around the high volume node, not unusual at all, right? But then finally you see one more time they came down, and what you would have seen if you watched this in real time was a really big rapid push to the downside, right? And it looked like they really wanted to take it to 23.1850, right? That they were going to break the low, and sure enough, it came to a vicious and sudden halt. You got an equal low without being able to test the lows in the tick. We get a push back in right here. Personally, I thought the second time we pushed back in, we attempted to break off of this. That was really my signal. What I was looking for is once that was established, was a 50-60 back. And at this point, my stop was and remained 1 point. Actually, it was a little bit more because I had to allow for the 1850 to be tested. So it's a little bit more than a point behind, and I was looking for a push back to the upside at this point. And you can tell once this process happens, so it's important. 1, 2, and then the third push. And on that third push, we push to the low on significantly less sell pressure. Why do I know it's less sell pressure? Because the tick is a reflection of all the, not of the S&P 500, but it is a reflection of all the stocks traded in the NYSE. And I know on that last push down, when the S&P 500 pushed to the low of the day, that the number of sells within the New York Stock Exchange did not equal the prior push down, right? So there was a type of divergence there. I need to check my time, how long I've been doing this for. Hold on 1 second here so I can stay up to date. Promise I'd keep this short, and I'm pushing right on the edge. So 1, 2, 3 pushes down. A push to the low with a much lower tick reading, right? And an inability to close at any point, right, through these pushes, these 1, 2, 3 pushes, all these 3 specific pushes could not close below the original negative 600 tick, right? So think about it. If you're a buyer versus seller, if you're a seller, you just try to pound and break the low. You gave it 3 strong shots. If you look in here, and once they trap back in, you can see finally on the second close above the 23.37, which going back to our HVN, that's this location right here. On that second close above, buyers come in. There's no one to hold us back. There's no significant resistance above, which brings me to my next point. I'm sure there's people who try to short Monday's high thinking we would go back to the low. Remember, in this environment, what you're looking for before you get remotely aggressive on shorts is that we first trade below the prior day's low. That's the first litmus test. What that means for traders in general is this. You will miss the roll from the high. There's no question about it if you subscribe to my theory of thinking, right? You will miss that particular trade, right? What you won't miss, and I'm gonna pull a fresh chart up for this, and hopefully this works. That's not what I wanted to do. Let's get rid of this. Let's try this. There we go. you will miss the first rollover, right? And I'm sure when you look on the chart, you would have said, oh, this would have been easy. But there is a line of carnage that goes on all the way through these days that have no significant rollovers. Yes, if you are very, very skilled at reading the DOM, if you're very skilled at reading order flow, you can pull it off, right? But most traders are not very skilled at doing that, right? Remember, the overall success rate of most traders is very, very small. Fewer than 25% of the people, fewer than 25% of all traders who attempt to day trade are successful. And the number one suggestion I can make for your long-term success would be to trade the side of the market that's easier. When we're in balance, right? And if you look back here, right? When the market's in balance like this, shorts work just fine. There's no problem with it. This is characterized obviously by there's no trend there, right? You can see that we're just trading sideways, and it didn't just start. It had been continuing all the way through February, right? So what happens to most retail traders is they go, oh, there's a two-sided market. I can short. You have to recognize when we've broken out and that balanced market has gone away. We will go back to a balanced market sooner or later. The first clue that we may even be getting towards the balanced market, I'm not even worried about it rolling down, just the balanced market, will be the market's ability to trade below prior day's low. Here's my thought about that. I don't think tomorrow will be the day. In order to trade below prior day's low at this point, the market's going to have to roll down and get more than 17 points of rotation. If we did it, it would be a change of character in the market. But because the majority of the roll downs have been less than 10 points in this particular rotation up, and that's on a 24-hour basis, right? I do not think tomorrow is the day that we'll break the swing low. If it happens, right, I'll be very, very excited about it, and I will look forward to seeing a two-way market hopefully start to develop shortly thereafter. Also remember, the first time we trade underneath the prior day's low here, we are likely to find responsive buyers 10, 15, and 20 points down, and we are unlikely to close below this point. It doesn't matter. In order to stop the one timing, all we have to do is trade below. My guess is that'll probably come on Thursday or Friday as opposed to tomorrow, but anything is possible, right? So we're in a vicious uptrend. There's a flood of liquidity coming into the market, and until that changes, which will be characterized by at least a trade below prior day's low, an expansion in the range, right, which means we'll have greater than a 10-point intraday range to the downside, right, which we haven't had in a long, long time, right? And then the rotations up will in generally be smaller than the rotations down. Those are the three things to look at. And when we start getting to negative 600 tick on the NYSE tick and we don't get a buy response at that point, you'll know that there's been a change in behavior. There's nothing wrong with shorting the market. It's not a good idea when the market's ripping to the upside. I'd go reference 1999, 1998 if you need a reference to how long the market can stay in that mode. So anyways, I think I've exceeded my time. I certainly hope that helps some traders out there. I'd love your feedback if you'd like to offer it. My name is Simon, and I hope everyone has a great night. Make lots of money trading. Don't believe the hype. Trading is hard work. Have a trade plan, have a process, and follow that process to success. Talk to you later. Oh, by the way, one last note. Nothing in the video should be considered a trading recommendation. Trading futures is a highly risky proposition. Past performance is not indicative of future performance, and I am not an investment professional. Please contact your broker and make sure that trading futures is right for you. Have a great night. See y'all soon.